Is Dogecoin the future of cryptocurrency, or just another passing fad? That's the million-dollar question on everyone's mind. At present, Dogecoin is trading at around 15 cents, with a market cap that hovers around $22 billion. That's no small change, but it's the potential for growth that's causing a stir. Dogecoin's future as an investment isn't set in stone. It's influenced by a myriad of factors, such as market sentiment, global events, and even tweets from influential figures. It's not just about the numbers, but about the story those numbers tell. Is there a bearish trend, or are we on the cusp of an upward movement? Investing in Dogecoin, like any cryptocurrency, isn't a decision to be taken lightly. It needs to be based on careful research, a deep understanding of market conditions, and a realistic assessment of your own financial situation. It's a game of risk and potential reward. But what does the data say? Let's delve into the numbers. Recent analysis paints a bearish picture for Dogecoin. But what does this mean? Well, in the world of trading, we often hear terms like bullish and bearish. A bullish market is one where prices are expected to rise, while a bearish market is one where prices are expected to fall. Now, this doesn't mean that the value of Dogecoin will plummet to zero. Far from it. It simply suggests a period of downward movement, a potential dip in Dogecoin's value. Currently, Dogecoin is facing resistance at 15 cents and 33 hundredths of a cent. In layman's terms, this means that Dogecoin is struggling to rise above this price point. Every time it reaches this level, it seems to bounce back down, as if hitting an invisible ceiling. Now, this might sound like bad news, but remember, in the world of cryptocurrency, volatility is the name of the game. Prices can move dramatically in a short period of time. So, this resistance level is not a death sentence for Dogecoin's potential growth. It's just a hurdle that needs to be overcome. And how can it be overcome? Well, that depends on a variety of factors. Market sentiment plays a big role. If investors start to feel more positive about Dogecoin's prospects, they might buy more, pushing the price beyond its current resistance level. But trends can reverse, and there are indicators that suggest Dogecoin could be on an upward trajectory. So even in the face of a bearish trend, there's always the chance that the bear could turn into a bull. The crypto market is far from predictable, and that's what makes it so exciting. Technical indicators, such as the Relative Strength Index and Bollinger Bands, point to potential growth for Dogecoin. Let's dive into what these indicators are and how they can be used to predict future price movements. The Relative Strength Index, or RSI, is a momentum oscillator that measures the speed and change of price movements. It oscillates between 0 and 100 and is typically used to identify overbought or oversold conditions in a market. When the RSI is above 70, the asset is considered overbought, and when it's below 30, it's considered oversold. A potential reversal in price direction can occur when these thresholds are crossed. Now let's talk about Bollinger Bands. These are a type of statistical chart characterizing the prices and volatility over time of a financial instrument or commodity. The bands are set 2 standard deviations away from a simple moving average. When the price of an asset moves closer to the upper band, it may be considered overbought, and when it moves closer to the lower band, it may be considered oversold. Just like with the RSI, a potential reversal in price direction can occur when these thresholds are crossed. So, how do these indicators suggest a potential reversal of the bearish trend for Dogecoin? Well, if the RSI is below 30 and the price is near the lower Bollinger Band, this could indicate that Dogecoin is oversold. Oversold conditions often precede a price increase as buyers step in to purchase the asset at lower prices. Conversely, if the RSI is above 70 and the price is near the upper Bollinger Band, this could indicate that Dogecoin is overbought, which may be followed by a price decrease as sellers take profits. These indicators, combined with other factors such as market sentiment and recent events, can provide valuable insights into potential future price movements. However, it's important to remember that no indicator is foolproof, and they should be used in conjunction with a comprehensive investment strategy. So does this mean Dogecoin is a good investment? Whether Dogecoin is a good investment or not is a matter of perspective. This statement, while seeming simple, is actually loaded with a lot of truth. In the world of cryptocurrency, there's a multitude of factors to consider when deciding to invest, and Dogecoin is no exception. First and foremost, individual financial situations play a crucial role. Are you in a position where you can comfortably invest in something as volatile as Dogecoin without it causing you undue stress or financial hardship? It's essential to remember that while the potential returns may be attractive, the losses can also be significant. The next factor to consider is your tolerance for risk. Cryptocurrency, and Dogecoin in particular, have proven time and time again to be incredibly volatile. Prices can skyrocket one day and plummet the next. This volatility isn't for the faint of heart. So ask yourself, are you someone who can handle this roller coaster ride? Then, there's the factor of market sentiment. It's no secret that public opinion can significantly influence the value of cryptocurrencies. From tweets by influential figures to major world events, the price of Dogecoin can be swayed by a variety of external factors. So keeping your finger on the pulse of the market sentiment is vital. Finally, consider the fact that Dogecoin, like any other investment, should be approached with a sense of caution. While it's easy to get swept up in the excitement of potential profits, it's crucial to remember that there's no such thing as a sure bet in the world of investing. Research, due diligence, and a healthy dose of skepticism are your best allies. So, whether Dogecoin is the future of cryptocurrency or just a passing fad is still up in the air. But one thing is for sure, it's a topic that continues to generate a lot of interest. To wrap up, let's summarize what we've covered today. We delved into the current state of Dogecoin, noting the bearish trend that's been observed. Despite this downward movement, we also highlighted the technical indicators like the relative strength index and Bollinger Bands that suggest potential for growth and reversals. As with all potential investments, we also stressed the importance of perspective. Dogecoin's suitability as an investment isn't a one-size-fits-all answer. It relies heavily on individual factors and market conditions. This is why caution is advised due to its inherently volatile nature. Events like Doge Day have undoubtedly sparked a surge in interest, but it's crucial to remember that interest doesn't always equate to a safe or profitable investment. Remember, investing in cryptocurrency is not without risks. Always do your own research and consult with a financial advisor before making any investment decisions. Thanks for watching, and stay tuned for more cryptocurrency analysis.